Good afternoon, everybody, and welcome to the Cambridgeshire County Council's Audit and Accounts Committee meeting for the 31st of May 2022. I'd like to begin by welcoming both committee members and those members of the public and press who have joined us today for this Audit and Accounts Committee meeting in Newshire Hall. The County Council allows filming and photography at its public meetings, so please feel free to take pictures and tweet during the meeting. Can I ask, though, that everyone present turns their mobile phones to silent or vibrate whilst the meeting is in progress? Please be aware that this meeting is being live streamed and that a recording of the meeting will be available to view on the County Council's website. There is no fire alarm test scheduled for today, so if the alarm sounds, please leave by the nearest marked fire exit and assemble in the car park. I hope that's all fairly clear. Let me introduce in particular Mairead Clayton, who is joining us for her first meeting as the new acting head of internal audit and risk management. That Neil Hunter, who has served us diligently for many years, has moved to become the new head of diligence and best value, which will enable him to fully focus on his work on supplier and subsidiary challenge and securing financial returns for the council. So both good appointments, which we welcome. Thank you. Item 1 is notification of appointment of chair and vice chair. Dawn.
Just to note that the annual council meeting on 10th of May agreed to appoint Councillor Wilson as chair and Councillor Gay as vice chair for the municipal year 2022 to 2023.
Thank you, Dawn. And we move on to apologies. Do we have any apologies?
We have apologies from Councillor Bowden. We have Councillor Janet French substituting.
Welcome, Jan. Any declarations of interest that are not already declared on your register of interests? No, thank you. We've received no petitions or public questions. So moving on to the next item about the public minutes of the committee meetings held on the 7th and 18th of March. We're being asked to approve the public minutes of the meetings held on the 7th and 18th of March as an accurate records. If any committee member wants to raise a question on the accuracy of the minutes, can they do so now, please? No, thank you very much. I see no objections, so we will take that as carried unanimously. On that basis, can I agree with the recommendation to approve the minutes? Assume that is carried unanimously. Thank you. An updated action log was also included in the published papers for this meeting. Are there any updates or questions on this, or can we take it as noted? No comments or questions, so we will take that as noted. Thank you very much. So we move on now to item 6. And this is the opportunity to hear from the external auditors on their value for money conclusion for the year ending 31st of March 2018. This is where we will hear a verbal update on the objections received in 2017 and 28, further to BDO providing the value for money conclusion in December 2021. I was concerned, and you'll recall from previous meetings, that we haven't yet had an update on, they finalised those objections. And I'm delighted that Lisa Blake and Barry Pryke from BDO are here today and have agreed to update the committee. So Lisa and Barry, would you like to make some opening remarks? And then we'll probably ask you a series of questions. Thank you.
Thank you, Chair. The committee will recall that we presented our narrative on the VFM conclusion for 2017-18 in November last year, and as the Chair's already said, then issued our VFM conclusion for that year on the 16th of December. Just for context, or to remind the committee, we needed to complete that work before we could go on to consolidate the work that we had already commenced in respect of the objections on the council's accounts for 2016-17 and 2017-18, which were wide-ranging in nature, but quite a lot of the core of those two objections was around contracting and procurement processes, which we wanted to complete our VFM work in that area before forming our conclusions overall in respect of the objections. So I am pleased to report, albeit we haven't issued a statement of reasons yet to the objector in question, we have completed all of our audit inquiries and audit work in respect of those objections. The finance team and others in the council have been very helpful to us in bringing all of that to a head and documenting all of those areas of work by the end of March. We had been hoping to issue or to start the drafting process for the statement of reasons and get that through the various hoops that it needs to go through by the end of April. But unfortunately, we did miss that timeline, although the statement of reasons has been drafted and it is currently going through that process. It's an iterative process that requires the involvement of our legal team in BDO as well as the quality assurance team in BDO. Barry and I are actually producing the statement of reasons ourselves. And then there is a requirement in the terms of appointment for the PSAA, Public Sector Audit Appointments Limited contract that we have for this work, for us to provide a draft of any statement of reasons to PSAA before it is issued to either the council for checking for factual accuracy or to the objector themselves in order to bring the whole piece of work to a close. So that's where we are. I'm happy to take questions.
Thanks, Lisa. Could you give us an idea of the timescale that you're currently working to? Because I think all of that update we have heard in the past, and it's becoming increasingly frustrating for me and other committee members that we haven't finished this and we can then move on to sorting out the next year's or subsequent year's audits.
Yes, of course. So the process I'm anticipating to be completed by the end of August. We do, as we said, I'm not sure of the turnaround times for PSAA, but I don't expect that will necessarily exacerbate it. In the past, we've had quite prompt responses from them. So just taking into account, the process has started, taking into account annual leave and requirements, because it's just Barry and I actually dealing with this now, and the annual leave of the legal and quality team. I expect that we'll be able to issue the draft of the statement of reasons by the end of August to the council. So the council will then just need to make sure, when I say the council, I'm talking about the finance team, so Tom and his team, just to make sure that there's nothing of factual inaccuracy in what we have stated in there that we need to correct, and then we'll be in a position to issue it to Mr. Mason shortly after.
Okay, I thought apart from Barry writing this up, which he was doing whilst you were away, we were virtually finished with the internal BDO processes. And to now hear that we're not going to get anything until the end of August, I know we're at the end of May now, but June, July, August, that's another 3 months. Seems an unnecessarily long time.
So I apologise that we didn't make the April deadline. The drafting wasn't done whilst I was away due to time pressures. There are a number of reasons for that. There are a lot of pressures on audit resource in the market in general, and BDO are not immune to that. We have suffered some unexpected attrition in our senior teams, which is putting pressure into that system in the short term now. We also, at the same time, this is our peak period for delivering NHS audit work. I appreciate that that's not a concern of yours, but we do need to manage both of those commitments at the same time. So what I wanted to do was be realistic. If we can issue this before the end of August, we will. But I think committing to something earlier will just lead to disappointment, knowing that it's holiday season and knowing what our commitments are to the end of June.
Okay, thank you. Let me open it up to other councillors' questions. Nick.
Yeah, I was just wondering whether there are any other local authority clients that you have that are in a similar position, still waiting for a conclusion of these issues that relate back to 2016, 2017, and 2017, 2018. Obviously, this is a very, very unsatisfactory situation as far as we are concerned. And it also means that the objector remains extremely discontented that his points have not been adequately addressed.
Sorry, I personally, when you say you, in my own portfolio, I don't have any in this position. In BDO, there are other objections that it depends on the nature and the scope and scale of the objection as well. We do have other audited entities that have outstanding objections from previous years. And if you wanted statistics around that, you would need to speak to PSAA. They're the ones that monitor it. I obviously can't speak for any other firms, but I don't believe that it's extremely unusual for objections to take some time to resolve, depending on the nature of them. And this was a particularly complex and very, very wide-ranging objection that involved both legal requirements and some, very, sort of some high-level allegations that needed to be dealt with sensitively, confidentially, and within legal bounds. And those things can take time.
I appreciate that, Lisa, but my understanding from what you were saying previously was that you had been through all the objections and you decided whether or not they were justified, and it was simply a matter of writing it up, and that you'd already started writing it up, and that we've had numerous discussions, not just with me, but with officers and the previous chair about getting this finished. And now here it's not coming until the end of August is very disappointing, I think.
Yes, I appreciate that. And I do appreciate the point that you're making. We were writing up, there's writing up and there's writing a report. So there's work that we need to write up in the sense of producing an audit file that stands up to external scrutiny, that can be reviewed by quality reviewers. So there's that part of writing up, which is what we were doing in the earlier part of this year. And then there's the drafting of the statement of reasons itself, which has to go through those iterative processes, which we should have started in April. We did not get started and finished in April as we had anticipated, and I apologise for that. We have headed in now to a difficult period of time in terms of commitments. So I can't, I could say an earlier date, but I don't think that would be a sensible thing to do. I'd like to commit to a date that we are now finally going to meet, and I would hope that we will be able to issue that statement of reasons by the end of August.
Are there any other councillors wish to comment?
Yeah, just to pick up on that, given the amount of time that's elapsed, which is now at least 4 years, the usefulness of any conclusions that you're going to draw are increasingly less useful In that circumstance, do you think it's reasonable that you should continue to claim the fees that would be due if you had completed this work in a timely fashion?
We bill our fees in good faith for the work that we've completed. We are charged with this responsibility under the legislation that defines our duties as a statutory auditor. And there's a process that we have agreed with public sector audit appointments for completing this work. I appreciate that there could be some, if there were recommendations to be made, that there may not have, you know, if we were to make recommendations on the back of this work, that those may not have been as timely, or would not have been as timely as they could have been. I think we have had discussions with the council periodically throughout this, and if we had felt that we needed to make specific recommendations, which we did, and we did as part of the value for money work, very significant recommendations, you will recall, that we brought to this committee. We had been in contact with the chief executive and the finance director and the previous finance director regarding those recommendations to make sure that actually action could be taken before that report hit the committee meeting in November. So I would, you know, we have attempted to communicate those things as quickly and as urgently as they have actually been concluded. So there are delays, yes, in the final reporting. I don't feel that we haven't done good work that is good value work that we are required to do under the legislation in order to respond to your local electors' rights. This is about responding to the local electors' rights rather than giving a value for money product to the council.
Okay, thank you. I've got Stephen and then Alan. So Stephen first.
Thank you, Chair. And I think what I would just want to clarify for the benefit of the committee and indeed for the webcast, no discussions taking place with this Chief Executive around the production of BDO's value for money statements. I have to say I agree with both the Chair and the Vice Chair's comments. I find myself disappointed that we're in this position. I think it leaves the Council in an invidious situation. And this is not the standard that I've come to accept from external audit partners and other public bodies. So I just echo the disappointment that the Chair and Vice Chair have already stated, and would hope that rather than being told we can hope to receive a draft report or draft statement for the 31st of August, we can have a confirmation in writing that we will have that date met at the latest, please. Thank you, Chair.
Thank you. Let's just hear from Alan, and then if you can respond, Lisa, please.
Thank you, Graham. Just very briefly, yes, obviously August this year is going to, is a lot later than I think we believed it was going to be. I'm slightly moving on a bit in that, is it my understanding that EY then take it over for 2019, or is that go to, because obviously we've got 4 years worth of value for money conclusions to come after this, which is obviously going to have a knock on it. And EY might not want to comment at this stage, but it's going to have a knock-on effect with their time, with their audit. And it's almost sort of trying to visualize when we'll actually be up to date with the value for money audits, because presumably they will then be subject to possibly more challenge from electors. If that makes sense.
Perhaps if I could respond in the first instance. So in terms of the value for money conclusion, that has been given, that work is finished, ended and reported to the council. So that has, the work that we're completing now in terms of the objection doesn't affect work that we were doing for value for money for 2017-18. Mark would need to comment on anything after that date, but that's been done. What we're talking about now is pulling to a close and reporting on the objection raised for the 2 years that haven't had the certificate given on yet, because the objection work is outstanding. Just picking up on the Chief Executive's point, yes, my apologies. The discussions we had were with the previous Chief Executive, and we will, I'll be happy to put in writing the commitment to the end of August.
Thank you. Mark or Tom, do you want to just comment on what the implications are of this further delay?
So just briefly then, I guess there is the objections cover similar information. So there is a sort of a sequential effect that I can understand from having the outcome, both on value for money, which we now have, and on some of the issues in the objection, which is informative to that further work. At the discussions we've had with EY, I think we'll be able to take a number of the previous year's value for money considerations, either concurrently or in quick succession. So relatively confident when we get to that, we'll be able to progress through it quickly. And we've been doing some of the work which is needed for the financial statements each year on ongoing concern is complementary to understanding that position as well. So that there has been some ongoing work, but we're in the auditor's hands, and as to when exactly they can they have enough to define fully the scope of that value for money and objection determination, and then the actual timescales for progression as well.
Mark, do you want to just comment on that?
Sure, happy to. I wouldn't disagree with what Tom has just said, but we are responsible for 2018-19 onwards. We have not, for clarity, accepted any objection as being a valid objection from 2018-19 onwards until Lisa and BDO have opined upon the previous objection, because there is crossover.
So not only are we holding up the finalized audit for 16, 17, 17, 18, but it's having a knock-on effect to all your subsequent work as well. And therefore that just emphasizes, I think, the committee's frustration that we're not getting this finished. But if you're able to take that away, Lisa, and give an undertaking to Tom, Stephen and I that it will all be done by the end of August, I don't think there's actually anything we can do about that. I think you might also want to consider carefully Nick's comments about the charges for this additional work and whether it's appropriate that we continue to get strung along as we feel as though we are being by BDO on this work. Any final comments from anybody? No? Okay, well, thank you very much for coming out, both of you. And we look forward to hearing from you. Okay, bye for now. Let's move on to the next item then. And we are on to, if I can find it. Item 7, which is the financial reporting and related matters. And Stephen Howarth, Assistant Director of Finance, will present this report.
Thank you, Chair, and good afternoon, everybody. This report contains related matters covering the statement of accounts for financial years 2020-21, which goes hand in hand with Mark's draft audit results report, which is item 8 on the agenda and may want to be brought sort of into this overall item, as well as 2021-22. In the interest of brevity, I'll introduce both aspects of this report, but like I say, we may want to also bring in the external auditor at the same time. In terms of 2020-21, the paper updates on the status of the external audit for that year's accounts, which is not yet concluded, but you can see from the updated results report or the draft results report that good progress has been made on most matters. But I would particularly bring to the committee's attention one issue around accounting for infrastructure assets or highways assets, which is holding up certainly conclusion of this year's audit in Cambridgeshire, and as a national issue as well, affecting a lot of other councils' accounts, particularly if they're highways authorities that have not yet signed their accounts off. The report does set out in summary what the issues are with infrastructure assets accounting, and we'll be happy to provide a bit more summary if needed. But just to say that is, like I say, affecting a large number of councils and is subject to an ongoing CIPFA consultation on revising the local authority accounting code to try to deal with the implications of it. The paper also sets out updates on accounting for City Deal grant, which you might recall was discussed quite at length in the one of the March committee meetings. And you can see from the paper that the conclusions have been reached around that, and I'm sure Mark will elaborate. And just to say, the alternative accounting treatments that were presented to the committee in that report are expected to be implemented. In terms of 21-22's accounts, the report just provides an update on the sort of the status of producing the draft accounts for 21-22. We're anticipating to produce them in line with the statutory timescales of the 31st of July. Government is consulting on extending the deadline for final accounts, final audited signed accounts to be moved from the end of September to the end of November. And the report sets out CC's position on that. And finally, just to say that the report includes an updated set of accounting policies, which will form the basis of our production of 21-22's accounts or draft accounts. They're largely the same as the ones that were used in the previous year, with one minor amendment and one additional accounting policy that are set out in the paper. I'll leave the introduction there. Thank you, Chair.
Thank you, Stephen. Any comments, questions, Mac?
Thank you, Chairman. Could I just get Stephen to confirm in terms of the infrastructure, the assets value, that's an accounting type problem, isn't it? I mean, it doesn't in any way affect the way the council is in fact managing the infrastructure. It's just the way they report whether it's gross or net. Is that so? So it's simply an accounting procedure we're concerned about. We're not concerned in any way that highways have anyway done anything wrong. I just want to emphasise that because it can sometimes get lost in these reports.
I think that is a good distillation of the issue.
Thank you. Thank you, Chairman.
Do you want to hear more? It doesn't affect what we're doing on the ground.
It's purely how we present the accounts.
Purely how it's presented in the accounts. It doesn't affect the balance sheet.
No.
That's my understanding. But it's a matter of choice as to which way you deal with that.
And as Stephen's already said, it's national, so if they're taking a pragmatic view in terms of reporting it as net in the future, that's fine.
Yes, if you want the slightly longer story. Okay. If you want a slightly longer story, ask Stephen. Any other comments, questions? I think what Stephen House is, sorry, Stephen, I have to be careful these days. What Stephen House has described is a very clear explanation about what's happening to the finance bit. If we move on seamlessly, but if you hang on there to the audit assessment, and then Mark can explain what's going on. Sorry, hang on before you do that, Nick.
Yeah, I just had one question about the financial reporting, and that's particularly relating to private finance initiative schemes. Obviously, this has rather come to the fore as a result of the situation with the BAT-C contract at Waterbeach. I just wonder if you could comment whether the way that it's being treated at the moment is appropriate, and whether it gives us any latitude to bringing these agreements to an end before their very long term is complete.
For the purposes of the accounts, I'm satisfied with the way that the PFI schemes are accounted for, and there are quite specific regulations around those, and they're subject to separate disclosure notes and are subject to detailed audit review each year. In terms of the wider aspect of whether contracts can be looked at in terms of difficulties that are coming out of changes to regulations, etc., that is something that we, as the changes come through, actively look at, and indeed is one of the things that the council sort of diligence team, Neil Hunter, etc., would be looking at in some detail as like I say, as these issues arise.
Okay, thank you. And sorry, just before we move on to Mark's item, we do just need to confirm the recommendations. So we have noted and commented on the report. We'll come on to the external auditor's draft audit results report in a moment, but we have also approved the accounting policies set out in Appendix A, including the 2 changes proposed to the current accounting policies set out in section 3.5, which is all about international accounting standards, as I recall.
Like me to comment on that briefly, Chair? Or
okay with that. Thank you, Stephen. I think it will probably come above our head. So let's move on then to Mark's review, which is definitely significant. So your assessment of the accounts, Mark.
Thank you, Chair. So in March, we brought you our audit results report with the procedures and the assurances at that point in time. The report before you today brings you up to speed with the assurances gained from the completion of the procedures that were marked as outstanding at that point in time, and therefore gives you as a committee further assurance ahead of sign-off. Though there are two key issues just to bring to your attention in kind of reverse order, if you like. So infrastructure assets is the first issue. So we have raised this as a new significant risk because it does have a material impact on the financial statements. But I won't say a lot more because I think Stephen's previous paper covered it adequately. Suffice to say that it is a national issue affecting any authority whose 2000 and 2021 accounts are not signed off yet, and has the potential to impact future years depending on the outcome of CIPFA's consultation. That does have the impact of potentially altering our audit opinion if officers and this committee would like an audit opinion issued before the conclusion of that consultation. I think Tom and Stephen may say more when I've concluded that. The second key area is around city deal accounting, which was outstanding in March. Having reviewed management's accounting proposal within the draft financial statements, we have come to a different view, which we have articulated within this. Management have concurred now with our judgment, and the city deal is not to be accounted for in one 200 million lump sum in year one, but spread equally over the 5 years of the deal to reflect the income as recognised in each of the 5 individual years. And we set out hopefully quite clearly in those bullet points the rationale for our judgment. We are still consulting on whether a prior year adjustment is required or not. Other areas which I think the committee should take note of is around property, plant and equipment, which was a significant risk, and the committee may remember that there has been significant and material audit adjustments in previous years. As we have now concluded our work and only raised 2 relatively minor issues for consideration, I think that's further assurance for this committee that things have moved on significantly in this area. And then in terms of group consolidation, the audit of this land limited has now been concluded, and the audit of that by RSM did identify some audit differences which now need to flow through into the group financial statement. So those are set out in here for you as well. Apart from that, I think they're the key messages, but clearly happy to expand on anything in more detail or answer any questions.
Any comments, questions from anybody? Alan?
Thank you, Graham. Just very briefly, I agree with Mark about the city deal accounting. I know we had a big discussion last time, and I can see the other side of the argument, but from an accounting point of view, I believe it's the correct treatment. And interestingly, as you were referring to the situation in terms of prior year adjustments, as to whether you would have to do that under CIPFA. And the third point, which is not really, I suppose it's not an issue for us, but is in terms of the infrastructure assets, the whole of government accounts, where you're going to have, if those some authorities have had their accounts signed off for 2021, then they're going to be on a different basis to others that, like ours, that haven't been signed off. I mean, that's not for us, but it's just an interesting sort of issue that will be dealt with at the centre, presumably.
So I can respond to 3. We are now anticipating that the threshold for whole of government accounts returns is going to be increased to £2 billion, which only leaves, I believe, a handful or a very limited number of authorities captured by that, and therefore the consolidation into whole of government accounts becomes a little bit easier. So I think that does address that one. And in terms of the prior year adjustment, yes, we are considering whether one is merited under the requirements of the standard based on what we have for this year.
Any other comments? Stephen, Howarth or Tom, do you want to comment on what Mark has said?
So it may be worth saying then that on infrastructure assets, there's two routes forward for the council. So either waiting to see the outcome of the SIT for consultation, or proceeding to seek a finalised audit opinion from EY, but recognising that that will have a limitation of scope in relation to infrastructure assets. In my mind at the moment, I think we're probably still a couple of weeks away from actually being in a position where we would be able to sign those final procedures to complete with the audit, and we need to resolve this prior year issue on city deal accounting that Mark has referred to. If we get to that position though, and we don't have a much clearer position from SITFA and because as with this issue as a whole, and particularly technical consultations of this type, the potential for unforeseen consequences, I am actually quite attracted to the opinion with a limitation of scope, because that would at least enable us to draw a line under last year's accounts and be really clear that the infrastructure assets issue doesn't have an impact on the value of the assets that the council controls, or on deployment of resources or service issues. And on City Deal, I'm pleased as well. We've been able to find a way through that we concur with the current auditor, and reflects, I think, the sense of this committee's deliberations last time, and what made most sense to users of the accounts, if not that there has been complex accounting considerations in the run up. Thank you.
Can I just ask Mark, how does all that we've heard from BDO about the timetable for finishing their work affect you? They promised it would be the end of August. I'm still not absolutely clear whether that means it will come to the council at the end of August, and then there needs to be a bit of turning around and confirming and checking and the like. But what's the knock-on impact for you on finishing all your work, as Alan has described earlier?
So I think it's a two-pronged answer. So I think we have commenced work on our value for money conclusion area, built on the conclusion that they issued in December to you. So we have commenced work on 2018, 19, 20, and 2021. But clearly we are running behind timetable. We'll need to catch up. And as Tom says, we'll probably look to go through issuing conclusions for each of those 3 years in relatively quick time when we're at the point to do that. But we are now behind the curve, as you note. In terms of the outstanding objections, clearly I do need to see what Lisa's statement of reasons are before determining whether the ones that I have in respect of those years I've outlined are valid, and therefore I will accept or not accept them. And clearly then that has a knock-on time implication depending on which route or decision I come to. And those have to be taken individually and then sequentially.
Okay, well, setting the objections to one side, but thinking about BDO work, is there, and maybe I think this is a question for Tom, is there any implication for the cost to the council of EY's effort on sorting out the audit as a result of BDO being so late? And if there is, then I think we would wish to note that as well, and potentially make sure BDO were aware and PSAA were aware.
So I guess as BDO was saying earlier, that there isn't an entitlement under the legislation to pass on the costs of both of objections and also additional procedures in relation to value for money to the council. We haven't had much information from BDO at all about what they're proposing to do in that respect. So we'll keep the committee closely updated when that information is received. And we've clearly heard the remarks that have been made today. With EY, we've always had very transparent conversations where additional costs are in prospect. And I think I'm right in saying we haven't had to have a conversation about that yet with respect to value for money, partly because of the stage that the work is at. But again, we'll keep the committee closely updated when we get there.
This is where we check how waterproof the new structure is. And I can see the chief executive looking anxiously. Okay, well, let's move on from costs and deal with that if it transpires in the future. Okay, so thank you very much for presenting your report, Mark, and Stephen Howard for presenting the finance. Are we happy members to note the EY report? Yep, thank you very much. Now we're ahead of ourselves, Dawn. It says 3:15, major infrastructure delivery. And clearly we are early. Well, but Alex, sorry, you are online already. So excellent, welcome. Are we?
Right, thank you. So I was just checking you can all hear me. I'm not used to Zoom. Clear?
Yeah, very clear. Are we expecting Steve Cox and Sue Proctor as well?
I think they were on the remote also via Zoom, I understand.
Yeah, they're coming by Zoom, but I would be surprised if they joined us this early, personally. Any ideas, Dawn? Shall we?
They were expecting to join a little bit later.
Is there anything because we could move on? Alex, are you expecting Steve to join us?
I think Dawn is perhaps best placed to. I'm not sure if Steve accepted.
Oh, okay, all right. Well, if they are able to come, that's fine. Otherwise, we can move later in the agenda because there's plenty for us to get at.
So sorry, are we taking the report or are you?
I think Alex, we're just waiting for Dawn to see whether she can get Steve and Sue. If she can, we'll take it. If she can't, we'll move on to something else.
I think we've got Sue in the meeting now.
Hi, Sue, welcome.
Hello, thank you. Sorry, that was really weird. I'm just down the corridor and I was going, yes, I'm coming. It would have been quicker to run down the corridor, I think.
Well, you're welcome to come down the corridor.
No, it's all right. I'm quite comfortable here now. Thank you.
Okay.
We are expecting Steve. I did send an email. I was just watching the meeting, so I did give.
I'll treat it exactly in that way. Thanks a lot. Cheers, Tom.
Is Steve in the building as well, Sue? I don't think So is Steve in the building?
No, he's not in the building. He's working from home, but he was planning on coming in around 3. But if you're happy to proceed, we can proceed, and then Steve can join us.
Yeah, okay. Well, let's do that, and then. But I was just keen that Steve, as the most senior person, should hear what the committee has got to say. But Alex, if you want to introduce the report, or Sue, whoever, and then we'll open it up to questions and comments as normal. So over to you, Alex.
Okay, thank you. Yeah, so I'm Alex Steens. I'm the Interim Assistant Director for Project Delivery. So as you'll be aware, Highways Capital Delivery was audited in summer 2020. The audit highlighted several areas where capital delivery could be improved. A project assurance group was formed in autumn 2020, which brought together expertise to review and improve processes and procedures, supporting change, and project reporting and risk management. Now, sections 2.2 to 2.23 detail the considerable improvements that have been introduced and embedded over the last 18 months. Appendix A of the report provides a governance structure that has been embedded across all projects. It details the gateway framework process that's now standardized and adopted, and also the improved reporting mechanisms that we've got around managing our projects. Appendix B shows the wider choice of procurement routes now established within the service, many of those being away from the term service provider milestone. Appendix C and Appendix D provide evidence-based improvement of project delivery over the last 18 months, with 45 projects valued at 163 million now being managed in the new and improved control environment. Appendix E of the report provides the project assurance group tracker that was progressed in consultation with Audit throughout the process to demonstrate compliance and closeout of the various audit recommendations. Paragraph 2.25 of the report summarises the amber items from Appendix E, which are still the remaining issues to be closed out. So, in summary, I think it's been demonstrated within the report that the service has come a long way over the last 18 months. However, that said, we're still working to close out the few remaining issues, which were highlighted amber, which we're planning on doing that, getting those closed out over the next few months. But again, we're keen to continue to improve the service and strive for excellence in all aspects of project delivery. So we will be not resting on our laurels and continually looking to improve the service. So I think that hopefully gives a summary along with the report. I'll just hand it back, please. Thank you.
Thank you, Alex. Welcome, Steve. We've got a bit of ahead of ourselves, Steve. So we are taking your item about major infrastructure delivery now. Alex has just introduced it, and you've joined at a timely moment because we're now opening up for comments and questions to the committee. Anybody have comments, questions? If not, I will start. So I was, first of all, as you say, Alex, this came about as a result of an internal audit assessment. So I just wanted to check with Mairead, and there's some background noise coming from somewhere.
Civil engineer, technician, degree.
I think it's gone now. Somebody's muted themselves. So I was going to ask Mairead whether you are happy with the actions that are being taken and the way the tracker is being described here.
Yes, so as you've stated, this has come out of an audit report which had a large number of recommendations. So what we've agreed with the executive director is that internal audit will go and do a full follow-up audit looking at the implementation of all these actions at the start of Q3 this year. That's because we've got a new assistant director starting in July, so that should give some time for the new assistant director to get to grips with the service before he's immediately audited. And so what we'll do is we'll bring the outcomes of that report back to this committee, and we'll use that as our follow-up, simply because doing individual follow-ups on these items, it wouldn't be practical with the number of actions we've had.
Okay, thank you very much. Any other comments? Steve, do you want to add your comments about how things have gone and the actions that are coming out of this internal audit review and the work that you've done?
Yeah, thank you, Chair. Just a couple of comments. I'm sure Alex will have covered most of it in his introduction, but it's been 18 months of quite significant reflection and change that we put into place across the Highways Capital Delivery Programme. And you'll have seen in the report that's taken the form of project assurance group, systems and processes, training for staff, as well as some senior management changes, which came in just over 6 months ago. So I'm content that good progress is being made, and that the culture within the teams has changed, is changing. There is still more to do. Of course, there's still more progress to make, and I'm appreciative of Audit's agreement to keep track of our progress and to bring a report on that to your attention later in the year or early next year, once that audit review is carried out. So it's a journey of continuous improvement. I think we're doing really well, making some good progress. I think the report sets that out, and Alex has led that for us with Sue's support. But there is, as I say, always more to do, and we look forward to continuing that journey in the next 6 to 12 months.
Okay, thanks very much, Steve. I'm not seeing any other hands. I want to put Stephen on the spot, if I may. Are there lessons that from this internal audit and the work that Major Infrastructure Delivery are doing that could be transferred to other parts of the business? So, for example, the care contracts and the very big contracts, valuable contracts, complex contracts that we have elsewhere.
I'll do the diplomatic answer. I think there's always a lot that we can all learn from each other in different parts of the council, and I know through the audit team, through the project assurance group, which has got our finance and procurement teams involved, that there is that learning in both directions from what we have done in highways and transport, in the way that we've got to firm grips with projects, but likewise bringing in good practice from elsewhere that we can build on and use as well. So quite possibly there is, and I think we should perhaps just take a moment to reflect on what that might be if we haven't already shared it, but we remain open to learning from good practice elsewhere in other directorates as well. I think that we can do that collectively through our corporate services colleagues.
Thank you, Steve. I was going to invite Stephen, Chief Executive Stephen, as there are too many Stephens at the moment. We've had Stephen Finance, Stephen Chief Executive, and Steve Transport. Anyway, Stephen Chief Executive, what lessons can we transfer to other parts of the business? And as Steve Cox says, other ideas that he can bring into his part of the business.
Thank you, Chair. We'll clearly need to change the recruitment policy and ban the name Stephen. First of all, I think there are some obvious lessons to be learned from this audit. Clearly, Steve and his colleagues in Place and Economy have been implementing a number of those points. I think more broadly around programme management and contract management, for me, there are some key learning points that colleagues in Place and Economy have already picked up upon and actually worked alongside HR and learning and development to improve skills within Place and Economy. So that's clearly a transferable piece of activity that we can share with other parts of the council. I actually think there's a broader point around our overall approach to commissioning, contract management, and not just capital programme delivery, but the robustness of our management of our supply chain as a council. Some of that's already been taken forward with the strengthening of the contract procedure rules, which has recently been approved by full council. But there's clearly more to do in terms of improving skills and contract management capability across the council. So I actually think the audit report was really helpful. I'm pleased the Place and Economy Directorate has taken some good steps towards addressing those findings. But in reality, for me, there is clearly more learning, particularly on capital programme delivery, that we can share across all parts of the organisation. And I know that Steve's been sharing learning points with other corporate leadership team colleagues from other audit points, so we can certainly pick that up as well. So, Chair, I think it's a good question and actually a helpful point for the Audit and Account Committee to raise today.
Thank you very much, Stephen. Any final comments from anybody? No, so we're asked to note and comment on progress to date, which we've done, delegate the final matters for closeout to the Executive Director, Pace and Economy, and note, as Mairead has said, that a follow-up audit of the implementation of the actions will be carried out in Q3 of this year. Are we taking all those? Yeah, thank you very much. Excellent. Thank you very much, Steve, Sue and Alex, for joining us, and look forward to seeing what Mairead has got to say after Q3. Thank you. So now we move on to Tom Barden, who I did see was on the line. Oh, he still is. Excellent. Hello, Tom.
Good afternoon, members.
See, you're here to talk about the performance management. So Tom is the head of business intelligence, and he will introduce the report.
Thank you. This presents the council's revised and refreshed performance management framework.
Tom, do you want to switch your camera off, because we're having some problems hearing you?
Is that better without the camera taking up the bandwidth?
It is, yeah.
Okay, I'll start again. So this item presents the council's revised and refreshed performance management framework for comment by the committee. The committee's receiving this report because of its role in providing assurance of the risk management framework and the control environment, and because of its role in scrutinising performance in relation to exposure to risk. This also, the refreshed and revised performance management framework also fulfills a recommendation from an audit of corporate performance management in the council in order to look again at the performance management framework, which had been held up by the pandemic. The new framework sets out a consistent and standardized approach to performance management, which is all about understanding how well we're doing at delivering our services in our priority areas and correcting approaches if necessary. There's detail in the report and in the performance management framework itself, but in essence, the framework specifies that the Strategy and Resources Committee should receive quarterly reports of strategic KPIs, which cover the whole council's activity organised by key priorities. These key priorities are determined by the annual business planning cycle. The Policy and Service Committees receive quarterly reports of key performance indicators covering the areas relevant to those committees. That management teams within the council will be looking at more detailed management information relevant to their areas. What the roles and responsibilities of committees and the officer management teams and services are in relation to performance management, our standards and approaches to setting and quality assuring key performance indicators themselves, and our ambitions for a performance management culture and how we publish information about what we're doing. In terms of implementing this in business intelligence, we've been working with service leads and committees to discuss and determine key performance indicators for policy and service committees in workshops. Some committees are now receiving performance reports, and we're restarting reporting following the pandemic. For example, Strategy and Resources Committee as a service committee is receiving a report in June, and the Children and Young People's Committee will be receiving one at their upcoming meeting in early July. And we're due to take a progress report on other aspects of implementation of the framework to Strategy and Resources Committee at the end of June. I'm happy to take any questions. Thanks very much, Chair.
Thank you, Tom. Any comments, questions from anybody? Well, let me start with a couple, Tom. One, in the performance management framework document, where you've got descriptions of all the different groups and committees, there's no specific mention to the Audit and Accounts Committee, as far as I could see. There is a good description of what our role is in the introductory paper, which you described earlier, but I couldn't see anything here. And then the second three things. The second was I'm not clear yet whether or not all the indicators have been confirmed. I think some of them were due to be confirmed about this time, but I'm not sure whether they all have been yet. And then the third, there was a question about, no, that's later. So those two questions, Tom. One was the description of what our role is in performance management and whether or not it should be in the framework document itself. And then secondly, are all these strategic KPIs now confirmed or not?
Thanks, Chair. So in relation to your first question, very happy to add the Audit and Accounts Committee role to the performance framework itself. I'm sorry, that was an oversight, but we can add that in now. In terms of the confirmation of the indicators, we have confirmed indicators for some of the priorities, but not for others. We've been working with the service committees to try to discuss through some of those issues, and we'll be taking a report to Strategy and Resources in June on progress. I think from memory we are about halfway through, so we've got confirmation for half of the priorities at the moment.
Okay. I always have a bit of a thing about KPIs as to whether or not they're things that we can directly influence or whether we indirectly influence them, and whether we can measure them and compare our performance with other comparable authorities, and whether or not we can work out unit costs of these sort of things. So something like number of universal credit claimants, I'm not clear whether it's good to be high or good to be low. And do we not need to determine that sort of thing before we agree these as KPIs? Or is it simply a fact? Because there may be things which are factual and there may be things which are indicators of the work or the influence of the county council.
I think you've put your finger on something there, Chair. That is that's been a topic which has been coming up in the workshops we've been having with the policy and service committee members, where we have been discussing which indicators we can apply, which are particularly relevant to the council services that they oversee, and which indicators actually are much more general and either the council more indirectly affects them, such as the universal credits indicator there, or where the work of services which are overseen by more than one committee is actually covered by that indicator, such as something like healthy life expectancy. So that's one of the things which we will be taking in the report to the Strategy and Resources Committee, and proposing some further discussion with Strategy and Resources Committee members, just from that particular aspect, thinking about at the strategic level, what level should those key performance indicators be based on some of the feedback from the workshops. In terms of your other question around KPIs having it's important that KPIs have comparison points, then I think that's absolutely right. And that's one of the features of a good quality KPI, which we've included in the framework.
Okay, thank you, Tom. Alan, you had your hand up.
Thank you. I did attend, there was a Zoom call for Highways and Transport Committee members. I was trying to see when it was, probably 6-8 weeks ago. I didn't, unfortunately, I couldn't stay for all of it, but there were a lot of KPIs that we were discussing then. Looking at the paper, are these the more strategic, high-level ones we're looking at? And then there will be other KPIs at a committee level. Is that my understanding of how that's going to work? Because I look at the ones relating to transport, and they're important indicators, but I'm not sure how. I think we need a lot more substance on them to make them meaningful from my point of view. Others, I don't know how other members feel on that, but so it's really two issues. We're looking at strategic ones here, but then there are a lot lower KPIs at a committee level.
Tom, do you want to address those comments?
Sure. So that's correct. The policy and service committees will receive performance reports which contain more indicators, enabling a bit more of a detailed look at those services, whereas the list which is in the back of the performance framework is very much the strategic set, trying to encompass across all of the work of the council in a manageable set, which is really quite challenging. And then obviously, yes, that does then miss out on some detail, which will be covered in the policy and service committee reports. It's probably also worth saying that for management teams will look at a lot more detail again, encompassing more and different aspects of service delivery even than are reported up to the policy and service committees. So it will work like a pyramid, if you like. At the top there'll be fewer indicators. As you go down through the organisation, then they'll be looking in more detail at more granular indicators.
Thank you. Alison.
Thank you, Chair. I've actually spent far too long looking at KPIs of different descriptions, and one of the things that I've come to the conclusion about over an awful lot of time doing this is actually what is more important than just simply looking at these things is looking at what other people have already done. To what extent have we looked at what other councils have actually got in place who are offering similar kind of services that will enable us to actually look at comparisons between the two? It's great to look at where we are and assess what we think is the correct position, but actually understanding from a sort of wider perspective is, much more valuable. Also, kind of going through a process, it sounds a little bit, reading through all of this, as if we have reinvented a lot of stuff which may well have actually been available from other authorities. Am I missing something in that? And are we able to make those kind of comparisons between organisations?
Tom, are you able to help there?
Of course. So benchmarking between and using information from different authorities against standardized indicator definitions is a really important part of service planning, and something which we use across the whole council. And very much our recommendation to members when we're working with them in the workshops that I described for selecting KPIs is about making use of well-defined indicators for which we have information over a longer time series, in order to give us some context and some comparison points to those other authorities. So that's something which I think is very important. And we use websites like the LGA run LG Inform, which collects together government published statistics about standardized KPIs and allows us to make comparisons to similar statistical neighbor groups, for example. So some of that is referred to in the performance management framework. I do think that it's important that all authorities should have performance management frameworks, and there is a great deal of commonality between them. I hope that what's in ours is representative of good practice. In preparing this one, then we looked at what was in place in other authorities, and we also had to think about how we do things in our authority too. That might be different, for example, in Cambridgeshire, where we released the Our Conversations framework, which is what we use for performance management and appraisal of individual employees. And we needed to think about how that would fit with our overall performance management framework that's set out here. So there are some differences which are relevant to particular authorities, but we looked at good practice across other authorities when we were putting this together.
Thank you for that. That's what I was hoping you would actually say. It's also perhaps a plea on my part that while KPIs are an extremely valuable tool for looking at things, they tend to be very much something that as accountants we can enjoy playing with and enjoy seeing the results of. But actually, there's something else that's far more important, which is actually delivering the services that we're here to do. And please, please do not let KPIs get in the way of delivering those services.
One of the Chair, would you like me to respond?
Yeah, do so, Tom. I was looking towards Stephen and see whether he wants to add something in the minute, but you carry on, Tom, first.
Okay, thank you. So I completely agree. And KPIs, we sometimes characterize them as a tin opener. They're a way of us opening up the tin, but then we need to use other information in order to get out what's inside and have a look and investigate. And that's a really important part of quality assuring and delivering services in line with our priorities. It's mentioned briefly in the performance management framework, but for example, we have a Power BI platform in use in adults and children's services. We're looking to extend that to other services, which provides a really high level of granular detail, allowing team managers, service managers to view very up to the minute information. It's refreshed every day about who's receiving services, how quickly we're moving assessments through the workflow, who's outstanding to have a review, which people need. Have had case audit files done, and all sorts of other things like that. So I very much agree that performance indicators are the tip of the pyramid, but we need much more granular information available to our team managers to effectively performance manage.
Thank you, Tom. Stephen.
Thank you, Chair, and thank you to Councillor Whelan for the question. Actually, there's a number of things in there for me. First of all, I'm long enough in the tooth to remember the days of the Audit Commission when, as a local authority, we had to report against 1,158 discrete indicators to government on an ongoing basis. So in some senses, that was the extreme version of KPI management and comparison between authorities, and that's not something I would want us to revert back to. So any approach to performance management needs to be proportionate. So I agree with the point that KPIs and the reporting of KPIs can actually be hugely helpful for us to see where services are performing well, maybe underperforming. But actually, it's that classic balance for me between inputs, outputs, and outcomes that we need to focus on. So I think the approach Tom and colleagues in business intelligence have been taking is the right one to work with services, to work with members, to get the right KPIs for us to be tracking, but equally importantly, not to make that too burdensome so that we don't distract focus from service delivery. I hasten to add that since the Audit Commission disappeared and we no longer have that formal comparative framework between councils, it's notable that government is revisiting those arrangements as part of the Levelling Up and Regeneration Bill, and maybe seeking to introduce some form of body to look at local government data. So I think on behalf of this council, along with other sector bodies like the Local Government Association, I'm sure we'll be pushing back to say, again, proportionate and relevant rather than consume us with bureaucracy. That's not what Tom and colleagues in business intelligence are doing for us, I'm pleased to say.
Any final comments from anybody? No, thank you very much. So thank you very much, Tom. We have noted and commented on the performance management framework. and we will review the performance report after it's been presented to Strategy and Resources Committee quarterly. Thank you very much. So we will now move on, Janet, to the next item, which is consultants and agency worker data for Q2 and Q3, 2021-22. And can I ask Janet Atkin, Assistant Director of HR Services, to introduce this report, please?
Sorry, yes. Good afternoon. As you just described, Chair, this is the report for an update on the use of consultants and interims and agency workers across the council over the last 6 month period. So you'll see from the report, this sets out the data for Q2 and Q3 of last year, and we'll be next time reporting on Q4 and Q1 of this year. The report sets out in section 3 that we had 2 consultants engaged via Opus in Q2. Those have both come to an end, and there was no usage of consultants via Opus People Solutions during the last quarter. Also set out is the information on all interims and consultants that were coded to the consultancy code D400, and that information is contained in Appendix A. That sets out the detail and explains that I think we had 29 people, different interims and suppliers during Q1. That had reduced to 29 in Q2, and then subsequently reduced again in Q3 to 18, which is obviously the direction of travel that we want to see, because we clearly want to reduce our reliance on interims and consultants as much as we reasonably can. There'll always be a need for some of that capacity within the organisation, but we do want to reduce the cost in that area. Section 5 sets out the usage of agency workers and interims during the last 2 quarters that we're reporting on, and that shows that there was a decrease from Q2 to Q3, which you'll see down from 3.5 million to 3.24 million, but it does clearly demonstrate it's higher than in the comparable period in the year before. And this to a large extent is because of the impact of COVID, frankly, and the significant amount of expenditure that we had, particularly around agency workers supporting public health. The vast majority of those have now ceased at the end of the last financial year, so we expect to see a real decrease in those figures moving forward. The only other thing that I wanted to draw your attention to really is under section 6, just to give you some assurance that we are continuing to look at the approval processes that we have in place to try and tighten up the usage of the additional needs for consultants and interims. So we are in the process of rolling out a new process via an e-form, which will hopefully be efficient for managers across the organisation. But I think more importantly, there'll be a much greater level of scrutiny at the time that these people are being engaged via our corporate leadership team. So there will be greater oversight at the point of people deciding that they need to engage somebody, which I think will put more rigour into that process and will be sort of a welcome step forward. So that's all I wanted to say really, is just if there's any questions. Thank you.
Thank you very much. Any comments, questions from anybody? Well, whilst people are thinking, I've got a couple, Alison. Firstly, I think it's good, the reduction in the numbers, which is clearly helpful. But in 5.2, we've still got 9.4% of the workforce costs being spent on agency workers or interims, which even allowing for COVID and the like seems an awful lot. And I was also unclear about how some of the consultants are counted as to whether or not they shouldn't be allocated as projects. So, for example, there's flood projects relating to Bar Hill surface water alleviation project. There's the highway conditions survey, and then separately there was the review of this land. Now, all of those, I would have imagined, could have been packaged up as discrete projects, and therefore I was unclear why they are included as part of consultant data, because there must be quite a lot of other projects which have got consultants working within them, which wouldn't appear on this list.
Okay, in response to the first point around the percentage of spend, that has been higher with the number of agencies and interim staff that we've had to engage. It was down to 8.8, but it's in the last quarter, but it is still high. I appreciate that, and I think we would expect to see that reduced to levels closer to what they've been previously, which has probably been more like 6%, I think, in the past. So we will keep an eye on that, and I think, again, that's why we're keen to see more rigour around the use of these people that will be afforded through the new arrangements that we're putting into place. So it's certainly one to keep an eye on. In terms of the consultancy spend, I think the spend that you're referring to on those projects is specifically around consultants we've engaged. But I think in discussion with finance colleagues, we can see that it could actually be coded either to the project or to this spend. It kind of fits in both categories. So I don't know if that's something that I perhaps can take offline and talk to Tom about whether it's more appropriately those spends where they are directly attributable to a project that's been coded elsewhere, whether we could record it differently. But they are specifically consultants brought in to undertake a piece of work that we don't have the internal expertise for at this point in time.
Okay, well, it'd be useful to get Tom's view on that as well. I don't know whether Tom or Stephen wants to comment on what percentage of agency and interims do you think is an acceptable figure? 9.4% seems high to me, even 6 seems high, but perhaps I'm just out of touch.
Well, I do think it's difficult to say at the moment, and the indications I see of the prospects is it may go up before it goes down. I can't remember in recent years seeing a more challenged workforce situation and having to take a number of steps to encourage employment. So we've just introduced, I think, retention payments for social work staff, which is one of the major areas where we've got higher numbers of interim workers. Really looking at recruitment and retention measures, which will hopefully bring that down in the long term. But I'd be kind of reluctant to set an arbitrary target while we're in such an uncertain period for workforce.
Chair, just to add to that, I mean, I entirely agree with Tom's comments. Actually, I think if you look at public sector more broadly, but not even just the public sector, talking to employers across the county right now, third sector, business, private enterprise, and indeed public sector, workforce is probably the single biggest risk all of those organisations, including this one, is currently faced with. Recruitment and retention is a fundamental challenge, and that's not just a local labour market issue, it's not a regional issue, it's now a national issue. So I think if you look at the likes of the NHS running on average 10% vacancy rates and still having high use of agency workers and interim workers, we know we're struggling to recruit and retain staff in some key areas. Tom referenced retention payments for social workers, particularly within children's services. And as the report bears out from Janet, that's one of the areas we're having to continue to put additional agency work and interim capacity into. The reality is everybody is, if I may say so, fishing in the same pool right now. There are not enough people out there to fulfill all of our needs or the other employers within the county. So I agree with Tom's assessment. We could actually see agency rates in our engagement actually increase in the short term until the labour market either stabilises or organisations are able to get supply sorted. So that's why we need to continue to embrace things like apprenticeships, training more of our own staff for the future, graduate apprenticeships as well. In reality, even talking to the Chief Constable, I think something like 50% of the frontline police officers in Cambridgeshire are now within their first 2 years of service. That's a recognition of the challenges we're all bearing at the moment. So I'm afraid I don't have an obvious solution, but I do have the honest assessment that this is a national risk for us in the public sector, but actually for employers more broadly, Chair.
Thank you, Matt.
Thank you, Chairman. I doubt there's any member here who wouldn't fully accept and empathise with the point that Tom and the Chief Executive made. Any difference between the way Chief Executive presented, it's not a national problem, it's an international problem. We just have to look every day now at people queuing up at airports for all the, all the same reasons. They just cannot get people trained in time to do many of the jobs that they need to do. Now, why, whether there's fault behind that, it's beyond, it's not our problem. But and I think we have to, as members, accept the fact that I think, notwithstanding your concern and the level that you've expressed, the 9% that you're expressing is of concern to us. I think that's going to, be honest, I think that's going to grow. And I think we're going to have to learn to accept that, because, and as Councillor Whelan already said, it's about delivering services. If we're going to deliver the services, we need the people in there to do it. And at the end of the day, if there's the only way we can get them, and if that is people's desires to, they know they can get more as an agency worker than they can, or as a consultant than they can as a direct employee, then I'm afraid we're going to have to accept that. I think in time it will level off, and but I can't see that light at the end of the tunnel myself. So, but can I, while I've got the floor, Chair, can I just ask Janet something in terms of the monitoring spending side of it? I mean, this reads well, and you're updating the approval process. I seem to recall we had this with a report came to us at one time where we actually had a case of that. I think an agency, a member agency staff actually able to employ another agency staff. Does this actually protect against that, this updating, so that the monitoring of it will prevent that happening? That just seems a bit odd that an agency worker can employ another agency worker.
I think you're talking about the ability for interims, yes, or senior interims to engage somebody else and sign off on it. Then yes, with the consultants policy and interims policy is pretty robust on that. We have done, Mairead and our colleagues did a thorough piece of work around an audit on that, and we've improved the policy to tighten things up as well. Yes.
Thank you, Chairman. Thank you.
Okay, thank you. Go on.
Just to round up and to give you a little bit of reassurance, because it is a bit of a bleak picture in terms of what Stephen's just described there, I think, and that's absolutely right. In the news, I think it was only last week, it was reported that for the first time ever, there's more job vacancies in the country than there are job seekers. So we are fishing in a small pond, but we are really redoubling our efforts around growing our own staff across all different areas of the council's business, looking very closely at social work and routes into social work and alternatively qualified work. Also, colleagues this morning have been locked in a room looking at apprenticeships for place and economy and how we can tackle some of the issues we have in that area. But I just wanted to reassure you as well that we are also looking at comparators from across the region. So I think I heard somebody saying that in relation to the last item. So we are trying to get some information from our colleagues across the region to see where we sit and get some information that hopefully will give you some assurance that we're not out of kilter with other colleagues. Thank you.
Thank you very much. Any other final comments, questions? No. Well, thank you very much for presenting that. And we're asked to note the current data on the use of consultants and agency workers through interims, which we have done. Okay, thank you. So now we're on to debt management update. I have in capital letters in red on my instruction sheet, adjourn meeting for a comfort break after 2 hours, but we are ahead of ourselves. So as long as you're all happy and I don't forget, we will continue. So Alison, are you and Dean, you're going to introduce this paper?
Yeah, sure. Thank you, Chair. So pleased to report we've got an improved position from last year's audit committee, which was in June 21. So the debt is reduced by 4.8 million down to 17.5 million. Dean's going to talk through the statistics, and then we'll talk about our continued service improvement plan and what we're implementing or have implemented. So Dean, if I could hand over to you for the stats.
Hello. Okay, so yeah, as I said earlier or just then, the overall bad debt provision or the debt situation has improved from the last time we came to audit committee. It's actually reduced by 4.8 million. It's a positive picture across most directorates with the exception of adult social care, where it has actually increased by 1.8 million. And we'll come on to that in a bit more detail in a minute. We've also within our data tried to do a comparison back to the same time last year, and we could see at the same time last year we're reporting also an improvement of around 5.2 million overall across all the directorates. But coming back to the adult social care picture as regards to increasing, as can be seen on page 119, the adult social care debt has actually gone up by about 1.8 million compared to the last audit committee. Most of that increase is in relation to the time frame now being experienced with court protection and similar type activity. That activity used to take roughly 16 weeks to conclude, but at the moment we're experiencing somewhere around up to 12 months for that to actually conclude. It's not just a local authority problem, it's a problem that the private sector are having as well. Private solicitors and everybody are reporting on their websites that these timelines are taking up to 12 months to complete. So that's the bulk of the reason for the increase in adult social care, as can be seen on page 119, because that would come under the court protection, the power of attorney, and also the securing of property charges, because all those types of activity, the time frame has elongated from what we previously used to experience. Before I move on from that part, is there any questions on the overall debt status?
Any comments, questions? I was just going to commend you for the reduction in the amount of debt that's outstanding, but then you spoilt it by saying, well, this is what was happening last year. So let's just concentrate on it's gone down by whatever it is, 4.5 million or something.
It has.
But what's disappointing is the court of protection activities, and I know this is a widespread problem, but is there nothing that we can do to influence their action or highlight their action? Or
not as we understand it, it is a national problem, and it is down to their backlogs. You know, we've tried various methods. We're calling them when there's significant delays to get through to them. Adult social care finding the same problem, so it is a problem that unfortunately is out of our control.
Alan, you had a comment.
A quick question on the overdue overall age debt position. I'm presuming on the second table, we've gone from 305k down to 71k pending write-off. That we've basically the movement is the fact we've written off a fair bit in that month, rather than that we've managed to recover that money.
Yeah, it's a right assumption. The majority would have been written off. Some of it may not have been because there may have been challenges, or that money may have subsequently come in. But the majority will be, we've written off that amount of money. For the whole year, I can say overall, the write-offs were fairly low. They were 868k, which isn't a small fee. However, that represents just less than 0.5% of the revenue raised during the 12-month period.
Yes, I did see that comment, which, as you say, is for that type of debt is relatively a low percentage. Yeah.
Especially when you're considering adult social care as well, and the complexities around adult social care, and the approach sometimes that people are full costed initially because they haven't declared their finances, and later on, once we understand their position, we might have to adjust that charge. So yes.
So adjusting charges is counted as writing it off, because I would have said it was different.
Yeah, I think it depends on the reason. But if we can validate the genuine reason, that it would go through as a credit note. In some cases where we've had to then justify it based on review of benefits and other things, sometimes it might be going through as a partial write-off for some of that, because we might have not been timely enough in our billing process to the individual. So it's a genuine charge that we're accepting because we weren't timely enough in formulating the full picture. We may have had to write off a small balance.
Okay, do you want to carry on?
Also, as the figures showed overall, the genuine improvement has been within the CCG area, where obviously good work has been done by finance with the CCG to actually reduce the debts that we had with the CCG as outstanding. So we can say as of now that all pre-April 2020 debts with the CCG have been resolved and have been settled. And the work is now commencing between finance and the CCG to look at the post-April 2020 debts, whereas at the end of the year, I think there was roughly 1.6 million that fell in the post-April 2020 period. So finance now working to resolve that, especially with the CCGs being disbanded fairly shortly. Is there any questions around the CCG area at all before I move on?
No, I think you can move on.
Excellent. Okay, so the last bit I'm going to cover now is the collection rates, as can be seen within the tables on page 120. The overall collection rate for the first 10 months or first 3 quarters of 21-22 was positive at around 94+%. Obviously, those figures will continue to go up, as is evidenced through the low level of write-offs that go through, because obviously the low level of write-offs is less than 0.5%. The last quarter of 21-22 was showing around 77% at the end of the financial year. However, that's because a lot of the charges had only recently become due. Some of them weren't even actually due at that point. Looking at the same period a month ago, so at the end of P1, that figure had increased to 88%. And I'm sure when we look at the P2 data in a week's time, that figure will have improved again for that quarter even further. So it's just a timing factor that means the later periods show a slower performance figure at this point. Is there any questions on performance figures at all? No? Okay, so I think overall that's probably it for me. So we've covered the write-off just briefly just now, which I was going to come on to next. And we can also see from our billing stats that the actual volume of billing last year went up quite substantially within adult social care compared to 2021. So I think overall it's quite a good performance for the team during the last financial year. And I'll now hand back over to Alison.
Thank you, Dean. So last year we outlined that we had a service improvement plan that we implemented. Since the last reporting period, there's been a significant amount of activity. So we've rewritten and produced 2 versions of a collection policy, a detailed policy and also a shorter version that's easier to read for the budget holders. So the policy basically outlines the debt code of practice, the key principles of bad debt write-offs, the principles of payment plans, roles and responsibilities within the process, and some internal SLAs in terms of escalations. So that got rolled out in April 22. So hopefully budget holders are sort of taking note of that. We're having various sessions with adult social care to go through those policies. So that's a good positive step for us. The next one we talked about the last meeting, where we're going to implement debt portfolios for the team. So each of the debt team officers now have a debt portfolio. This gives us management information. We can manage productivity and also performance, and also measure our resource levels where they're actually correct. The next one for me is quite an important one. We reducing invoices sent via post. So we did an exercise in November 21 where we baselined the volume of invoices that were sent out by post, which was very high. It surprised me. It was 76.79%. So we've now reduced that by 11.19%, 66.7%. So we've had somebody come in. We've done a bit of a campaign where we've started with schools to ring up the schools to say, would you rather be invoiced by email? The take up has been significant. And now we're going to roll that out with adult social care. There's a table in there which outlines the the increase in take up of email. So obviously it reduces the costs. The invoices are getting to the right place first time. So I think this is quite significant for us. We're going to continue to drive that, and hopefully we'll get to under 50% in the next couple of months. The next one is another significant change. So it's been delayed a little bit because we've had a change freeze in the system. We have scoped out new recovery letters for adult social care. So previously all recovery letters, our 3 letters, were at invoice level. So if you owed 1 invoice, you would get a recovery letter just for that invoice. So now what we're going to do is send a statement style recovery letter. So the customer will understand the whole of their debt that's outstanding rather than just the individual invoice. But hopefully that's going to transform the customer experience, and also it will support the resource within our debt team. Another thing we wanted to do was put complaint codes at account level. We had quite a resource intensive process where if you wanted to put a complaint code which buckets the debt, that went in at invoice level. We've now been able to put that at account level, so that supports more accurate data as well as resource efficiencies for the team. It's been met really positively with the team. We've also improved self-service within ERP for various teams across the council, particularly in adult social care. So rather than having to reach out to the debt team for a copy of a remittance or something like that, we've done some additional training so they can self-serve off the system, so they can provide the customer the information right there at their fingertips rather than going to another team. And then we're continuing to work on billing accuracy. So particularly in the NHS and local government organised at other councils, if you don't raise a PO, your invoice will get rejected. So we're trying to encourage budget holders to raise POs, make sure that they put the right invoice addresses on, gather the emails, make sure the figures are correct to reduce the volume of credit notes. So we continue to work with Tom's team in cascading communications out to budget holders. And then obviously we've got the debt reporting pack, which was changed significantly over the last 18 months. That continues to evolve and provides further analysis. And as the years go on, we'll have that trend information. So I don't know if you've got any questions on those improvements.
Any comments, questions from anybody? That sounds a very comprehensive set of improvements that you're proposing. Presumably at our next report, you'll let us know how those are going and being implemented. When you're sending out emails to people, presumably you're not necessarily going to send them to individuals. It'll depend on their capability of receiving emails. I can imagine that you're sending them to companies and schools and care homes and the like. But if you sent them to my 93-year-old mother, not that she has care from county council, she would get in a complete flap. So
we're going to do a very different piece of work with adult social care. We're going to work really carefully with the social workers, the adult social care teams. It's very different to the commercial debt. So that will be managed slightly different, more, and we'll work with the social workers to do that. It's like you say, it's a little bit more sensitive, and some people may welcome it and others would rather continue to get an invoice by paper. So we appreciate that.
Indeed. Mairead, you got involved in this some while ago. What do you think of the changes that are being made?
Yeah, I think, debt is a big area for audit. We look at it every year. And I think that if you look over the past few years, there's been a consistent trend of improvement in the debt recovery opinions that we're giving from audit. This year, the audit gave a moderate opinion on control and good on compliance, which is an improvement from last year, which is an improvement from the year before. So yeah, we see a lot of positive movement in the team, and we've agreed some further actions, some of which Alison has outlined. So hopefully we'll continue to see that improvement.
Thank you very much. So it sounds very positive. Good to see the debt numbers coming down. Sorry, Matt.
Yeah, ma'am, with your indulgence, can I just go back to the CCG question? Because CCG were always a bit of a problem for us with debt collection. And although it's improved and you've cleared quite a lot of the debt, or they've cleared the debt, you talk about the CCG ceasing to exist in the summer of this year and the integrated care system coming in. Presumably, like any other organisation which takes over somebody else, they'll inherit the debt. are you expecting to see any sort of step movement in our relationship in terms of getting money from the integrated care system? I'm not sure how it's working, so I think you understand the question.
I've got an NHS background, so spoken to former colleagues, the debt, everything's going to be migrated across to their new system. They're continuing to stay with shared business services, which is the outsourcer. And I think the relationships will be maintained. Majority of the staff are still around, so it should be pretty much the same. Yeah.
I was really looking at this, Chairman, to see if we might see an improvement in the payment on time arrangements.
Yeah. I've forged a relationship with the Director of Finance for SBS, so I'm hoping now that we can get some traction on any other debt within that area.
Okay, thank you, Chairman.
Thank you. Okay, go on, Steve.
Chair, just a comment that might be helpful in response to Councillor Maguire's question as well. The new Chief Financial Officer for the Cambridgeshire and Peterborough Integrated Care System should have a greater understanding of the pressures of the NHS on local authorities. She is actually a former Cambridgeshire finance professional and went on to work in the NHS in a number of organisations before returning to the county. So she will have an appreciation of our position and will obviously want to work well with us. I hasten to add somebody having also had experience of the NHS and working directly with shared business services. We'll be picking up those conversations with Jan Thomas, the Chief Exec of NHS Cambridgeshire and Peterborough as well. So we would expect the good progress on debt management with our NHS partners to continue. Thank you, Chair.
Sounds encouraging, Chairman, but I hope loyalties don't get stretched too much.
Well, that's very reassuring. It's just that the NHS debt seems to have been dragging on for a long time, but any actions that can be taken from all sides would gratefully receive. Excellent. Thank you very much. I think we have given that a good airing, and we have noted the actions and approach being taken to manage income collection and debt recovery, and agreed that a further update will be provided on the position at the end of 2022-23, and Mairead will be doing her annual internal audit review as well. Thank you very much. So we move on now to the update on the response to the external auditor's value for money opinion for 2017-18 and findings of the procurement weaknesses. Now, this is the separate report that was circulated after the main agenda pack came out, and Tom will introduce the report.
Thank you, Chair. Yes, this report has been prepared by my colleague Claire Ellis, who's the head of procurement. She's on annual leave this week, so I'm introducing the report. The committee will recall that in November 2021, we received BDO's findings on procurement, which we referred to earlier in this meeting, and there were a number of recommendations emerging from that the council has taken forward. BDO's findings at that time reinforced some earlier work that our own internal auditors had done in 2017-2018, which gave us a good foundation and good start to implementing those actions in any case. Actually, one of the most helpful things has been the arrival of Claire Ellis herself in January. So she joined the council as the head of procurement at that stage and has brought in perspectives from her work in other councils and parts of the public sector, which has brought fresh perspectives and an impetus to some of this work. Just working through section 2 of the report, we talk about the progress that's been made with the accuracy of the contract register. It's now embedded that that's linked to our accountancy system, and performing additional checks and controls in the procurement team to compare and cross-reference information between our expenditure data and the contract register on a monthly basis. Another key area in the BDO recommendations that we still need to progress further is the mandatory procurement training for all officers. So we sequenced this after the kind of guidance and contract procedure rules updates that I'll talk about in a moment, and have been in liaison with the learning and development team in anticipating for being able to launch that training in the autumn, and then clearly because it will be mandatory for all contract managers, needing to take some time to implement it from that stage. There's been improvement and codification of both the procurement guide and contract procedure rules. Previously, we had quite a lengthy, unwieldy contract procedure rule document. So some of that information, where it's guidance, where it's appropriate, has been made into a more user accessible document for officers available on the intranet. And then the elements that form part of the Constitution, the contract procedure rules approved by full council recently. There's been some further internal audit work to look at procurement compliance. Some of that is still in progress. I'm afraid to say it has detected a further historic example of a consultancy appointment which didn't complete all of the internal controls, and that feeds into some of the work that that Janet Atkin was referring to earlier in terms of our enhanced procedures and governance, particularly around consultancy approvals. So giving extra impetus to that work we've talked about in needing an e-form, making sure there's appropriate approvals and procurement compliance. Then section 3 of the report provides the annual report on procurement activity. The committee will see there that there's a range of procurement activity and compliant routes to market, whether that's through competitive dialogues, dynamic purchasing systems, mini competitions, or fully open processes. And we report on the number of waivers submitted and the broad reasons for those, and across the council, contextualising that in terms of the value of those waivers, the average value, and the council's overall spend. At high level, there may appear to be a large number of waivers, but I think given where we have been previously, it's a good thing to have that visibility. All of the waivers above 10k I look at and consider, and where they extend to even higher value, they have monitoring officer input as well. So still, as the internal audit and as we've said, in relation to training and awareness, still some further progress to be made in this area, but pleasing progress so far as well. So thank you.
Thank you, Tom. Any comments, questions? Simone.
Thank you, Chair. Just touching on the, it's number 3 of our recommendations that were agreed. The training is provided and reported to the committee for both members and relevant officers. Have we had this training for members? Or have I missed that? I know that on the end, it talks about 3.11, revised contract. I don't know why I don't put my glasses on, I might be able to see. Revised contract procedure rules include information on expected roles of members in procurement activity in line with the LGA, a councillor's guide to procurement. So actually that's the first I've seen or heard of that.
Thank you. Yep. So it's more in the 3.10. So we did ensure as part of the new members induction that there was a high level induction to public procurement for new members, but we will need to do more on that, as we say, at 3.10. So once the training package for officers has been developed in the autumn, there will be something specifically for members as well to pick that up at that stage as well.
I think that's a good point, because we need to be aware of our responsibilities in all of this.
Exactly, Chair. I mean, this is what came out of the fact that members were having a conversation about procurement with directors, and this is the whole point of this, and we need that training for definite.
How do we take that forward? Is that something, Tom, that you refer to Michelle? And
yeah, we'll make sure it's on the forward member training programme. I know Michelle's been looking at that lately, so we'll take it through there.
And the internal audit work, Mairead, is disappointing to have discovered these various places where consultancy appointments haven't followed the required rules. But how confident are you that we're on top of that now?
So one of the complexities with sort of auditing procurement compliance is the timing and the fact that you tend to find that you're looking backwards in time. You know, if we pick a sample of procurements to audit, we have two options. We can look at the council's contract register, but if we select recent contracts from the contracts register, we're already selecting contracts where the chief officer has followed the rules sufficiently to have recorded it on the contracts register. So we're sort of skewing our sample in favour of contracts where people have followed the rules. So instead what we do is we pick a sample of procurements based on current expenditure. So we look for expenditure that's going out of the authority right now, and we follow that back to its procurement. And what that means is that, you know, sometimes we do look at contracts which were procured a year, 2 years, sometimes even longer ago. And so you do have a bit of a time lag if you're just trying to look at procurement compliance and see what's happening right now. It can be difficult to give that assurance. The other area that's a particular issue for audit is offices and services just not being able to locate evidence for us. So absence of evidence isn't evidence of absence. We can't say that procedures definitely were not followed, but we don't have the evidence to provide this committee with an assurance that procedures have been followed. So one of the actions that's touched on in this report, which I think is really important, is the action which is around establishing central storage location for contracts over 100k, which is something that procurement are exploring at the moment. And I think if we can do that, then the evidence available to audit will be greatly improved, and we can give you a more up-to-date and accurate assurance opinion that isn't hampered by things simply not being available, you know, especially with some of the staffing issues that were discussed earlier in this meeting. High turnover of staff, lots of agency staff, sometimes documents just aren't available.
Thank you. Stephen, it does refer to the corporate leadership team considered the findings and committed to prioritising compliance, which is excellent. Is there anything you want to add to that?
Nothing substantively, Chair, just to say that we did spend time with the corporate leadership team discussing these findings, as Mairead's aware. I am in the process of setting up performance objective meetings with all the directors as we speak, and as part of the corporate objectives for this year, we're obviously going to be looking at how we improve compliance with audit findings, but also with contract management arrangements more broadly, and support the new contract procedure rules Council recently approved. So it's very much something on the radar for me, Chair. Thank you.
Excellent news. Okay, thank you very much. So we have received an update on the actions taken and planned in response to the identified procurement weaknesses, and noted and commented on the County Council's actions taken and planned as set out in that report. Okay, thank you very much. So now we move on to the item 14, the draft annual governance statement. I beg your pardon, do I? Yes, I do. It's 2 hours. So shall we have a 5 or 10 minute comfort break, depending on how you're all feeling? And we'll come back about 4:10. Thank you very much. welcome back, members. And if we can restart on the audit and accounts meeting. We're now on to the item about the draft audit and governance statement, and Mairead is going to introduce the report.
Thanks, Chair. So this is the draft annual governance statement. This is a statutory document which forms part of the Council's statement of accounts, and it sets out how Cambridgeshire County Council complies with its code of corporate governance, any significant governance issues that should be noted, and any actions that are planned to improve the system of governance. So to get the document to this draft stage, Audit complete an annual review of the Council's Code of Corporate Governance and key policies and procedures. We obtain self-assurance statements from directors, asking them to confirm that governance arrangements in their areas have been complied with, and to highlight any exceptions where the governance hasn't operated normally in their area. And then we've worked with members of CLT to update and refine the report that you have in front of me. We take the lead as internal audit in coordinating production of the annual governance statement, but the actual content of the statement is very much led by senior management, particularly the Section 151 and monitoring officer, and members, particularly the Audit and Accounts Committee. So this is the committee's chance to identify anything you think is missing in the statement, and to reflect on whether you feel that the annual governance statement reflects your perspective on internal control within the council and the definition of significant governance and control issues that is noted at section 3.2. Any feedback from the committee can be taken away, and we'll look at incorporating that into a final document, which will then form part of the statement of accounts.
Okay, thank you, Mairead. Any comments, questions? It seems extremely comprehensive to me. So I think we note that it's extremely comprehensive. So thank you, Mairead. And we're happy that it goes forward to the next stage, whatever that might be. I think I can't now find it, of course, but I had a very minor comment which said that the audit committee is made up of all major political parties. And I was trying to think, well, all the parties that have been elected to the county council are represented on audit and accounts. So unless Neil was trying to be clever and say, oh, well, you haven't included the Greens, or you haven't included UKIP, or you haven't included somebody else, I didn't really follow that. But that was just to demonstrate that I had read it.
Yeah, I think we can definitely take that away and tweak that wording slightly.
Thank you. All right. Okay, thank you very much. So we're on to the next. And so we have considered that the draft audit and accounts in Appendix A is consistent with our perspective of internal control within the council and the definition of significant governance and control issues given in paragraph 3.2. Thank you very much. So we move on to item 15, the internal audit annual report. And again, Mairead, would you like to introduce the report?
Thank you, Chair. So this is a report which is required under public sector internal audit standards, and the head of internal audit gives an annual opinion on the council's control environment, which is based on the work that's undertaken throughout the year by internal audit. And this also sort of forms our Q4 reporting to yourselves as a committee, as it summarises everything we've done throughout 2021-22. So the most important bit to draw your attention to is the head of internal audit opinion at section 2.1. Neil Hunter, our former head of audit, has given a satisfactory assurance. That is a slight reduction from last year's opinion of strong satisfactory, which is due to a known issue with payroll control accounts. That's covered in detail in the report at section 4.2.3 to 4.2.5. Then I would particularly note as well that contract management is noted as a key area that audit will continue to focus on within the next year as part of that opinion. I won't go through the report in huge detail because it is rather lengthy. I'm happy to take questions, and I'll just highlight a couple of key areas. before then. So section 4.1 is our follow-ups of agreed audit actions, and that table shows 47 outstanding actions. Sounds like a lot. It is a reduction from 65 at the March meeting, so we've closed 18 actions since then, and 27 of those are the project assurance actions in the mid-directorate, which were discussed earlier in this meeting. So if you discount those, we've got 20 outstanding actions. Actually, no, we've got 19. We've had one more closed since the report went out. And then we've also brought along an update on risk management, including the risk register and supporting documentation that went to the meeting of Strategy and Resources Committee on the 29th of March. So that reflects some, but not all, of the risk register updates that were discussed at the last meeting of this committee. There's a couple that require sort of major changes to the risk register, so that those changes are ongoing. So yeah, I think that's all I will cover in detail, and I'll just open up to questions.
Okay, thank you. Comments, questions? And again, while you're thinking, this may be a question for Alison, but the draft of the pensions report was due on the 20th of May. Did we get it? Is that okay? Is there anything that needs to change on here? And then the second question, really for Mairead, I guess, or even Stephen, is the audit of the payroll system. I understand what you've written here, but it just seems frustrating that we're not getting a clean audit of what is something run by West Northamptonshire. So should we do the pension bit first?
The pensions meeting isn't until next week.
Thank you, Chair. So on the element relating to payroll and the provision from our colleagues in West Northamptonshire Council, worth saying to the committee that actually before this was due to come into committee, I'd already scheduled a meeting with the Director of Resources and the Assistant Director of HR. Since rejoining the council, I've had some concerns about the performance of the payroll service that is provided to this authority, and I've had to be directly involved in addressing some issues raised by individual employees concerning poor performance, it would be fair to say, as a consequence of which we are taking a number of steps around improving controls and reporting from the payroll shared service with West Northamptonshire Council. Tom is attending a meeting on the 9th of June where a number of these concerns will be raised. Janet Atkin is also following up on that. I have to say, if I compare that to the lead authority functions that we provide to some of our other organisations in what was local government shared services, we report assiduously on the performance of those functions. We make sure that the governance arrangements are robust. And whilst we know that West Northamptonshire are developing an improvement plan around payroll, I don't think that that's being given the necessary rigour of pace that we would want either as a client authority or indeed on behalf of our workforce. So it's an issue of concern, and the specific point highlighted in the audit opinion is one that we're actually following up directly, and Tom has been discussing with the other Section 151 officers who share his concerns and mine around that issue. Thank you, Chair.
Okay, thank you. Could we include that in our actions just to monitor for future meetings and fully support the activities that you and Tom are taking to get payroll sorted? That is a key key service for staff. And any other comments, questions on this report? No? Okay, thank you very much. So we have reviewed and commented on the annual internal audit report. Moving on then to the, sorry, go on.
One thing in the, so just looking at the list of recommendations that are overdue, notice that there's a substantial number of bullet points relating to this land. And I was just wondering, I hadn't heard previously about the involvement of this firm of solicitors, Threaths, but we are due to get a report on this by the 30th of June this year, I think. But what I'm concerned about is that at the board meeting with this land, the set of concerns, they were actually not aware of them, and I was just wondering if this had now been shared with the now chair of this land, and whether they've responded at all to it.
I don't know. Can somebody help?
Yeah. So, excuse me. So there are two outstanding recommendations in relation to this land, which are quite detailed, as Councillor Gay has identified, and have a number of subparts. So, Freef's a specialist, or have a specialist local government legal practice. This land are actively working with us, and Freef's and this land are separately represented through their own lawyers to improve the make sure we've got on the right footing the legal agreement between the company, both in relation to loans, first of all. So confident I had a meeting about that last week, and we'll see some progress in the near future around that. And then they're going to take a step back and just look at the governance setup as well, and make any kind of recommendations to how that could be improved. The company secretary at this land is changing over as well, so an opportunity to just reset some of those arrangements coming out of the AY recommendations as well. So this land are aware of all of this work, and it's being progressed. They perhaps haven't seen it in exactly this form, so I'll make sure they're aware of that as well, but we're progressing this work very constructively with them.
I think Nick's comment was that the chair of this land didn't seem to be aware of county council's concerns.
Yeah. Yeah, okay, well, I'll make sure this conversation is directly relayed to him. So, yeah.
All right, thank you very much. Any other comments? No, okay, so thank you. We have reviewed and commented on the annual internal audit report, and we move on then to the committee agenda plan. Dawn, do you want to update us?
I've got nothing to add to the agenda plan as set out in the papers.
Okay, thank you. Is there anything that anybody else would like to add to the agenda plan? I'm just conscious that it seems to finish fairly quickly. No. Okay. Well, we'll need to work on that. Now, I completely missed this. Somehow, I had a comment about the corporate risk register. Was that part of your report? Well, if you don't mind, people, I'm going to go back to the corporate risk register, because there was, I know this is the risks have been assessed by Strategy and Resources Committee, but I was just concerned that one of the risks on page 187 of our pack concerning the council doesn't have enough budget to deliver agreed short and medium term corporate objectives has been reduced from 20 to 12, reflecting an increased clarity regarding the council's budget post-pandemic and recognising the robustness of the council's governance in this area. I agree with both of those statements about robustness and post-pandemic, but in view of inflation, rising demands for council services, the issues we talked about earlier about the difficulty of attracting staff and needing to pay interims and consultants more, I'm surprised that we have reduced that risk score from 20 to 12. And I just feel it's something which the corporate leadership team do need to keep a very close eye on. So I'm just throw that comment in and invite Tom or Stephen to comment.
Thank you, Chair. Very helpful comment. We will certainly keep a close eye on it. The corporate leadership team regularly receives updates on the budget position and forward forecast. We had a detailed session earlier this week looking at budget position in year and how that carries forward to next year. I think perhaps we've perceived this risk as around the council running out of resources, and that in the past that's perhaps how it's been scored, and I think we are in a good position relative to where we were perhaps in the middle of the pandemic for the reasons that you've read out. But this is an area that requires ongoing attention, and all of the kind of mitigations and controls that have been set out in the report are very important. So the scoring in itself maybe isn't the thing to focus on, but I can absolutely give the assurance that we're closely monitoring this area and giving it due attention.
Okay, thank you. So going back to the agenda itself, the very last item refers to FACT and HACT and ESACT. Is there any update on any of those that and therefore we can start to program in when we'll be able to consider them?
So I'm not sure this is an area where I can give you an update in public, as it says there is some commercial sensitivity. There is a colleague who isn't in the room today who has been working on this to try and bring forward an update. There is still some both commercial and legal sensitivity to it, but we will give you an update on that, Chair, and update the committee in due course when we can.
Yeah, I wasn't after what's going on. I was more after when are we likely to be able to discuss it either in public or in confidential session. But perhaps you can speak to me separately about that. Okay. Nothing else from anybody? So we have noted the agenda plan, and this is the bit where we exclude the press and public. So I now need to read it out, the statement. Can I ask the committee to agree that the press and public be excluded from the meeting on the grounds that the following report contains exempt information under paragraphs 1 and 5 of Part 1 of Schedule 12A of the Local Government Act 1972 as amended, and that it would not be in the public interest for this information to be disclosed in discussion, as it contains information relating to any individual and information in respect of which a claim to legal professional privilege could be maintained in legal proceedings. I will need somebody to second that. Or Mac has. So thank you very much. And the committee has voted unanimously that we are now moving into private session. So we will close the